Yeah, it's puzzling, this rally that we saw yesterday. I mean, is there anything more to this than just a technical bounce, you think?
Yeah, I think it's more likely a technical bounce. I mean, obviously, if you've been trading Chinese market for the past decade, you will see that, at times like this, at the last hour or even the last 30 minutes, the national team will move in. And national team tend to have, different accounts with different brokers. Right? So when they operate, it's very difficult to detect, what exactly is happening. But the pattern is there, right? So, who is trying to buy at the last 30 minutes? Right? So I would say that it's more likely a technical bounce that is led by the national team.
Do stocks fall further, though? That's the other thing. Have they set a floor?
I don't think it has enough money to set the floor. Okay. Right? So,
it's that bad, huh?
Well, it's one against the market, right? So, the fundamentals are still very weak, right? So, if you look at the canvas of economic picture, it looks pretty bad. And then we're not seeing enough policy stimulus. We're not seeing details of policy stimulus with a number that we can work with, right? So, therefore, as a result, people are losing heart and giving up on their positions.
Your report, though, is looking for at least some green shoots,
yeah,
I think.
Right. Yeah.
I'm
trying to give
some good news to this
yeah.
market. What are you seeing? I mean, especially when it comes to housing demand in particular, I thought was interesting. Is that demand basically delayed or actually disappearing now?
Yeah, I think people are still buying from the SOE developers, right, which is a sort of a brighter spot in a very gloomy picture. And for some of the SOE developers, sales is up very, very strongly year on year. Some of them actually doubled, their sales. So I would say that there are still resilient demand in the sector, because if you look at the urbanization process, right? So you're adding on 1% of the population to urban cities. So each year you're talking about 15 million new people going into the city, right? So that means there's still resilient demand for housing there.
And can I tie that together with what we're seeing in iron ore? That's something you've also highlighted in your report, where you're trying to find bright spots.
Yeah, I think iron ore and in general, commodity has been doing quite well in the past couple of weeks. Right, so iron ore is a brighter spot in the sense that we're still seeing a long position being built in this commodity, and also along with other key commodities in the sector. So there are many explanations at this juncture. I mean, it's very difficult to say that, wow, people are buying iron ore, because they are foreseeing, strong housing demand, right? So obviously that's not unlikely to be the case. But then, there's another explanation is that, the geopolitical risk is rising as well, right? So as a result, people are building up on key commodities, materials, in prepare for, something unlikely that is going to happen.
But you think maybe we might have formed some sort of bottom the second half of last year. Are there other markets or leading indicators to you that, what could come next? What could also bottom next?
Yeah, I mean, what's puzzling is that, if you look at prices across assets for signals, iron ore is saying, well, risk on, right? Because, it's a leading indicator that leads the market by up to 3 months. But then if you look at the long bond yield in the Chinese market, it's still coming down, right? So it means that, people are risk averse, they're trying to hold on to safe assets and long bond yield, because the deflationary pressure is still on. Therefore, it's safer to buy long bonds. So, prices are giving you different signals, and it's not a clear-cut picture. And then at the same time, you have a national team force that is in the market trying to sort of stir up the pot a bit. So then as a trader, it makes it very difficult to form an expectation. Which price signal do we work with at this juncture?
Okay. What do I make then about the currency? So we've talked about maybe a floor in stocks. Have we seen a top on dollar China?
I mean,
are we near a top on dollar China?
Yeah, well, as you can see, right, so 7.3 is sort of a psychologically important point for the PBOC, right? It's touchy here. And that's why we're seeing the PBOC trying so hard to defend this level. Right, the last low we saw in the CNH is about 7.3, 7.33-ish. Right, so as a result, one could say that between 7.3 and 7.4 is likely to be the sort of a lower level for this cycle.
This is a range, okay?
Yeah, so that's why we're seeing so much intervention, and to say the PBOC has enough resources to defend this level, to be honest.
Oh, okay. You said they don't have enough?
They have.
They have the tools to
they
defend
have
this.
enough.
Okay.
Yeah.
Okay, so we're okay on the currency, maybe not the equity market.
And I think is the assumption basically that they're going to be doing these sort of piecemeal measures, defense measures in the currency. It's in a way of buying time until they get through some of these structural problems when it comes to resolving debt, for example.
Yeah, I think that's right. I mean, if you want to restructure your debt, you don't want to restructure your sort of a leverage, amid market crisis, let's say, right? So
Yeah.
it doesn't give people too much confidence. So if you look at the two developers, the leading developers, Evergrande is like 2.4 trillion yuan in debt. Country Garden is like 1.4 trillion yuan in debt. It's quite substantial. And I say if you add up all the leverage of the developers, it amounts to well over 10 trillion yuan. Right? So it's staggering. So how do you restructure that? I don't think there's a clear answer just yet. Because price is still going down, developers are still having trouble recycling the cash, et cetera, et cetera. Therefore, you really want to create a sort of a stable environment, to initiate a debt restructuring process.
Yeah.
And do you think we've seen firm evidence that the housing market weakness has translated to consumer weakness? In other words, from an investment strategy, can I treat the recovery in consumption separately from the housing weakness, which will likely persist for a few more years?
Yeah.
You don't seem convinced.
Yeah, well, if you look
Try harder.
If you look at the retail sales growth, I mean,
Yeah.
it's so weak, right? But then at the same time, one should keep in mind that retail sales growth doesn't account for, all the service
Yes, that's true.
in the economy.
Yeah.
So, as I travel in the mainland, across many cities, I'm seeing, hotels being like overbooked, right?
Right.
So they're fully occupied. Restaurants are fully
Yeah.
booked as well. It's very difficult to get a table.
Domestic
so I
travel.
think the service strength is not being reflected in a retail figure.
Is that something that you can position around the market then? How the nuances in the consumption story?
Well, I think it is a better sector, right? So it's showing more resilience than the other ones. But then at the same time, because the general market is so weak, then even if your sector is outperforming, it's still probably not giving you absolute return. So I think at this juncture, people like, if you're a trader in the Chinese market, people say, wow, if we are positive on the outlook of the Chinese economy, we really want to buy the Nasdaq, because if China is doing well, then U.S. it will pull the U.S. through as well.
Yeah.
One of the puzzling things this week was, the banks not reducing their loan prime rates, and there was speculation that they're holding back because China's preparing something bigger.
More targeted.
Something bigger and more targeted to boost this economy. You were mentioning earlier, markets don't have a number to work with on stimulus. Do you think a big announcement is coming, whether that's a rate cut or something special?
Yeah, we're hoping. We're really hoping. Because now we're cutting interest rate by 10 bips each time, right? So back then we're doing like 25 bips each time. So if I were PBOC, I would cut it like 100 bips at one go. And then at the same time, if you remember, right, so from late October last year to early this year, there was a strong bounce, right? Do you know why? Because PSL on the PBOC balance sheet has expanded 350 billion yuan, right? That's very powerful M0. Right, so as a result, people are seeing hope, and so the first quarter was like quite good for the market and also for the economy. But then, after we get into the second quarter, if you look at the fiscal deficit, right, the fiscal deficit actually shrank this year, right? So shrink by 1%. So it basically means that the central government is not spending money to help the economy. So as a result, as you can see, we are what we are right now.